All right, everybody. Super excited for today's video. Going to be another banger. All right, we're going to take a look at oil, UNG. We're going to take a look at natural gas futures. We're going to take a look at the spot price. We're going to take a look at cold as well and break down everything for you guys. So make sure to smash that like button, subscribe to the channel. The first thing we'll do is break down the year-to-date performance. All right, and then we'll actually go into the May performance, take a look at how natural gas has been performing in May. All right, there's some very important seasonality things when it comes to seasonality. I made a very great video in April, right when April started, showing you guys historically the returns for natural gas in the month of April. And it was a very useful video, okay? So we're going to break down the seasonality of natural gas as well over different time periods and take a look at things in different months. And if we look at June and July, there's some very important and interesting data that you guys need to be aware of if you're trying to invest in natural gas. So we'll break down all of those throughout different time periods. We're going to take a look at cold as well. Now, cold is honestly my favorite of all of the natural gas funds to trade right now, just because I'm an options trader, okay? So, you can go short cold, you can go long cold, and being that it has a higher premium, okay, aka a higher dollar value, the options will pay more money to you, okay? So I really like trading cold a lot these days. We have UNG, okay? We also have Boyle. As I mentioned, we'll break down, the natural gas spot prices and different things like that as well. We're going to take a look at the futures on the 4-hour chart, all right, as well as breaking down the monthly chart for natural gas futures. So that way you guys can get a bigger idea of the macro perspective. If you're looking to trade natural gas funds like UNG, Boyle, or Cold, you got to pay attention to the futures and you got to pay attention to the spot price, okay? Those are going to be some of the most important things to pay attention to. Now, full disclaimer, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer and we'll go ahead and hop right into the video. All right, what is up, traders? What's up, tycoons? Super excited for today's video. Got another natural gas video for you guys. It's going to be a really good one. There's some super important data we have to go over, okay? We'll take a look at the year-to-date performance. All right, we're going to go over the May performance as well. I'll break that down for you guys. But the seasonality is what's super important right now, in my opinion. I made a very detailed video going over how natural gas performed in the month of April. And now we're approaching June here, and there's some very, very interesting data you guys need to be aware of. So we're going to break that down historically from 2019, from 2014, 2009, all the way 2004 to 2023, and show you guys the stats of how natural gas performs in June as well as July. It's going to be really important stuff for you guys, okay? Especially if you're trying to invest in natural gas right now. We'll also break down cold, which lately has been my favorite to trade out of all the natural gas funds. And simply the reason being is because I'm an options trader and the premium around cold is much more favorable, okay? Because it's up in the 80s. And here recently, it was just below $60. It was in the 50s and it had an amazing rally. And I was able to generate a lot of, nice premium through options trading. All right. Now, we'll also break down UNG. Full disclosure, I do have shares of UNG. Now, I have a super small amount of shares in UNG. I actually sold and took some profit around here. I'm not trying to brag or say I'm some perfect trader. Okay. It wasn't like some amazing 100% gains or anything like that. But I did trim most of my UNG shares and have a very small position left over. We have Boyle right here. Okay, we have the Boyle daily time frame. I'm out of all my Boyle options as well. Okay, so just right now at the moment, I only have UNG shares. We're going to break down those charts. We're going to go over the natural gas spot price as well and show you guys the RSI and MACD signals that I use. And really, these are some simple strategies that I like to show people on YouTube. So that way you guys can understand a little bit more. Some of the strategies that I'm going to break down. If you're trying to trade natural gas, you got to pay attention to the spot price. You need to pay attention to the futures as well. So we'll break down the futures 4-hour chart. We'll break down the monthly chart so you can get a bigger idea of the macro perspective for natural gas. All right, as always, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involves a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. Now here we have the year-to-date performance from 2023 to now. We can see that natural gas futures are down about 51%. UNG is down about 57%. Meanwhile, oil is down a whopping 86% since 2023 has started. Now, if you're not familiar why UNG, which isn't leveraged, is still down more than the natural gas futures, there's an important concept called contango. All right, and there's decay associated with UNG and both oil. I have a very, very good video breaking down all of that for you guys in high detail. I highly recommend watching that if you're not familiar with some of the decay risks associated with UNG or oil. Okay, that's not to say that there aren't myths around it that, I actually busted in that video. But there are some important facts that you guys do need to know, so that way you can understand what it is truly that you're investing in. Okay. Now, when you look at the May performance, pretty much all of these look like a head and shoulders. Okay. I won't get too technical, but you can see a left shoulder here, a head, a right shoulder, and they're all down, a significant amount in May. All right. We have the futures down about 6%. We have UNG down about 11.5% and oil down about 25%. Currently at the time of this recording. Okay. And that's from the beginning of May. Now, back to that seasonality. Okay. Again, very important data that I really wanted to share with you guys, which is why I'm making this video. And we're in the month of June right now. Okay. And what I want you guys to pay attention to, all right, is basically this is the percentage of months in which nat gas closed higher than it opened, and this is from 2019 to 2023. So this is about the past 4 or 5 years. And June has been horrible, guys. Absolute trash. It's a very bad month for the positive price movement of natural gas. Look at this. 25% of the time, natural gas has closed higher than it opened. Meanwhile, in April, and I showed you guys that really good April video, April was a whopping 80% of the time, and we did actually see natural gas close higher than it was in April. So, if we're going to use seasonality in the short term, from short-term history's perspective from 2019, June does not look like a very good month. Now, short-term wise, July appears to be a pretty good month. Okay. About 75% of the time closing higher. Now, when you go back in time a little bit more and you look at from 2014 to 2023, all right, June and July are positive 33% of the time. Okay. So again, not outstanding numbers, right? I'm really not looking for big returns on going long in natural gas during this month of June. It just historically does not seem like it's bound to happen. Okay. If we go even further out in time and we take a look from 2009 to 2023, 36% of the time, natural gas closed higher than it opened, right? And if we look at from 2004 to 2023, 37% of the time, right? So you look, June, July, historically, the longer you go back in history, don't look like the best months to be trying to go long in natural gas, okay? The only time July looks good is in 2019 to 2023. So more recently, July has been a much more favorable month. We'll see if that trend continues, okay? But take a look at August here, okay? From 2019 to 2023, August has been an amazing month for natural gas, okay, here in the recent times. In 2014 to 2023, 89% of the time it's green. All right. In 2009, it's about 64%. And then from 2004 to now, it's about 53%. So, in more recent history, August has been a very bullish month for natural gas. We'll see if that trend continues or if some of the more historical data around 53% of the time from 2004 is able to play out. But to me, the most important fact, okay, is that June is not a great month for, natural gas closing higher than it opened, right? You have to keep that in mind. It's the very beginning of June. And you want to know these type of details, if you're trying to invest, right? Which is why I'm making this video for you guys, okay? Now, we'll go ahead and take a look at the spot price real quick. This is the Henry Hub spot price, and we're going to take a look at the RSI and MACD signals that I like to use as potential entry and exit signals, right? And so when it comes to the RSI, this is this yellow line down here. This is this indicator. What this is your relative strength index. This is going to measure the relative strength of whatever you're looking at its given price. And oftentimes you find something known as divergences, right? And so I'll point these divergences out where we have a low and a lower low, right? So clearly price is in a downtrend here, making lower lows, but on the RSI, we have a low, and then we actually have a higher low. So we're actually increasing in relative strength as the price is going down. This is a simple term known as bullish divergence, and it's an indicator we may see some type of bullish activity, right? And sure enough, we do get a very strong move up. If you combine this with the MACD, and now with the MACD, you're looking for an entry signal, which you really want to pay attention to the red line here on the MACD. When you see this curl above the yellow line, as it did over here, that's what's known as a potential entry signal, right? So if you take a look by using these two indicators, rather than depending on one strategy, because no one strategy is ever going to be 100%. That's just a fact. If it was, we'd all be millionaires or billionaires, right? Investing all of our money on every single play that had the exact strategy forming. But when you can start to combine a couple strategies together, you can get a little more confidence in your moves, right? And so here we see actually two strategies suggesting that we could get some upward momentum. We have number one, the bullish divergence, and then number two, we get that MACD crossover, right? Same thing happens over here. We're creating these lower lows while the RSI is creating these higher lows. And we see a MACD crossover to the upside where the red line crosses above the yellow, and we see a strong move to the upside. Now, this plays out as well to the bearish side, okay? So take a look over here where we're creating these higher highs and we're in an uptrend, but the RSI here is actually in a downtrend creating lower highs, right? We have a high, we have a lower high. So we're losing relative strength as price action is going higher, and we see a red line cross below the yellow line on the MACD here, and that's an exit signal. We've had a very big move to the downside afterwards, okay? Now here currently, we've been building bullish divergence for a very long time, right? Notice how we're creating these lower lows in the price action of natural gas when it comes to the natural gas spot chart, but we're seeing this increase in relative strength index, right? We're creating these higher lows constantly, and they've been good bouncing points and entry points to go long whenever we approach this bullish divergence trend line, right? You can see we've bounced off of there many times, and we need to be very cautious right now because the more times you test a trend line, the weaker it gets. And if we end up breaking through this bullish divergence trend line, we could really see an unexpected move to the downside if you're not prepared and not looking at something like this, right? We've already tested it 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, guys. We bounced off the same trend line. I don't know how many more times we can bounce off the same trend line. Not to say that natural gas has to crash. Okay, I'm not trying to sound like a perma bear, but I did just give you guys that June data seasonality, and June does not look like the best month. And if we end up testing that bullish divergence trend line that we've been using, and we really haven't seen a huge upwards move, right? We've really just seen very small, short-lived bounces each time we've bounced off that bullish divergence trend line with really no strong follow through to the upside. So, you need to be very cautious if we break through there, okay? I just want to point that out to you guys. Now that we've broken down that strategy to you guys, what I want to go over here is the natural gas futures 4-hour chart. And, you can use chart patterns to really help give you guys an edge. All right, we have these major supply zones and demand zones. That the supply zone is here in red. The demand zone is going to be here in green, okay? And we'll look at the macro chart, the monthly chart, to show you those monthly supply and demand zones. But over here, we did have this rising wedge. You see it played out. We had a move to the downside. Over here, more recently, we did just put in a head and shoulders pattern. That head and shoulders pattern played out. Now, you may be wondering what these yellow lines are, and these are your Fibonacci levels, okay? So specifically over here, we had our major Fibonacci retracement levels of resistance. And the reason you use all of these is because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you're going to get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. And so here, we had this really strong downtrend that we came in from, and we retraced. And we really needed to flip our 61.8% retracement level to support from resistance to really push higher and head up higher into our supply zone. And you can see over here, we were able to get above that 61.8% retracement level, but rather than flipping it to support from resistance and heading higher, okay, you can see we came up here to that supply zone, and that strong supply imbalance really pushed us through down to our major key levels of support. And that's what these are right here. These are our fib levels of support, right? We have our swing low, we have our swing high. We're looking to see if we can retrace and continue this uptrend. And we actually just broke through our 61.8% retracement level of support. And we're flipping it to resistance here currently, which is not a good sign. Right. And if we hold this level as resistance, there's a very strong chance we could come back down into our demand zone. Now, this aligns with natural gas not performing well in June. Okay. So, maybe now is not the best time. But here's the thing. If we can clear back above here, all right, we do have the chance to head back up higher. Okay. But right now, we're really, trying to flip that resistance, that support level to resistance. That's not a good sign. And it's a sign we could potentially, head lower. Same thing on the RSI here, right? We have this same bullish divergence, right? Take a look how we had a low here, then a lower low here. We had a low, and then we created these higher lows, right? And we've been creating these higher lows, bouncing off of this bullish divergence trend line over here, over here, over here. And recently we just broke below it and flipped that to resistance as well, right? Look at the very clean rejection of that trend line here. And now we're starting to point in a downwards direction. So we really need to get back above the level on the RSI. And we really need to get back a little above this level here on the natural gas futures chart. Okay. If we zoom out a little bit and go to the monthly chart, we do have a historical demand zone that we've bounced in many times in the past, right? Back in 2016, over here in 2017, over here in 2018, right? And then in 2020, we consolidated in this area, and that's when we went on our explosive bull run. We put in these overhead supply zones here that we're currently battling, right? And so you can see each time that we've come down into this demand zone on the monthly time frame, we have reacted positively upwards, but we haven't been able to, get rid of the sellers, right, in the imbalance of supply in this area on the natural gas futures. Okay, so each time we come up, we end up coming right back down just as hard, and we're really consolidating, okay, in no man's land, right? When you look at things from a macro perspective, this is where you want to be going long. All right. You don't want to be going long here in no man's land because you're not sure, are we going to head to the supply imbalance and drop back down? Are we going to drop down into the demand zone and head back up? UNG, Boyle, KOLD, a lot of these, they trade based off of the futures. So you want to be paying lots of attention to the futures charts. Okay. And really that's going to give you the T on what Boyle and UNG, KOLD, all those other, funds are going to do. Now, when we take a look at KOLD right here, I mentioned in the last video, we had this rising wedge here and we had this move down. Now, I was expecting a move down, retest, and then a continuation lower, honestly. But I did go long right here on KOLD, and it turned to be a really, really profitable play. As you can see, KOLD really exploded to the upside. So here's what we have known as a classic look below and fail. So we did have this rising wedge pattern, and then we looked below and we failed, and we actually came back into the range of the pattern. This is actually a bullish signal because at this moment, bears have the full opportunity on a retest to really show that they're in control of price action and push things lower. But rather, it showed that bulls are in control and we're able to push things back higher up into our rising wedge, range that we had here. And as we mentioned, natural gas does not look good in the month of June historically. And so that would actually be bullish for KOLD. So from a seasonality perspective, KOLD looks bullish. And then also from a technical analysis standpoint, we had to look below and fail. We held the major 61.8% retracement level of support. And it appears we're going to be continuing higher potentially to our bullish price targets of 93.79, if not 103.65. So those are the key areas right now. Again, if you look at the MACD is very useful for spotting potential entries and exits, right? Over here, we have the red line crossing down below. We can see we have a nice move down. Then we see the red line cross back up above. We have a nice move up. Red line crosses down below. We see a strong move to the downside. Red line crosses back up above over here. We have a nice move to the upside. So currently, if you're looking for KOLD to go bearish, you need to see that MACD exit signal, okay? We also had bearish divergence here that we recently just broke through, okay? If you take a look, we had a high, we had a higher high, higher high, higher high, higher high. And, this initial bearish divergence caused a pretty significant drop right around this time period. Remember, I mentioned a look below and fail being bullish. here we had a classic look above and fail, and that was bearish. Okay, so if you take a look, we had the high and the higher high here, and we had a very significant drop, right? We also had bearish divergence where we had a high and a lower high, and then we had the MACD crossover to the downside. Huge move to the downside. Okay, so we're again combining two signals together between the RSI, between the MACD, and we can predict, possibly a bearish move. All right, then we come back up, we retest this bearish divergence trend line. We see a significant pullback here, a huge red candle on the daily time frame. We pull back, retest that trend line again, pull back again. And then over here, we actually break out above this bearish divergence trend line, but we get a look above and fail, and it's very bearish, and we actually come back down. Take a look at where that look above and fail was, right over here. And that's when we saw a huge move to the downside on KOLD. But here recently, we've actually broken through, right? So if KOLD wants to remain bullish, if it does pull back, we need to bounce off of this bullish divergence trend line here and continue heading higher. If we get another look above and fail, that's going to be bearish for KOLD and bullish for things like BOIL. Okay, so remember that. KOLD essentially is the leveraged bearish ETF. Meanwhile, BOIL is, the leveraged bullish ETF. So as I mentioned, I do like trading KOLD a lot more at the moment, just because I'm more of an options trader. And so it's easier to make more money shorting KOLD or going long KOLD via options than it is via BOIL. Okay, just simply based off the dollar value and the premium generated from, the strike prices moving more significantly. Over here, we take a look at BOIL. Now, BOIL is potentially setting up. All right, what we have here is these lows, these lower lows, lower lows, lower lows. You should be familiar and tired of hearing me speak about bullish divergence by now, but these are really good trading signals, right? They're never going to work 100% of the time. But if you take a look, over here, there was a nice 28% move in BOIL based off, we had the low here. All right, then we had the higher low over here on the RSI, bullish divergence. We got a nice 28% bounce. Then what do? We end up pulling back, creating another low, lower low, higher low again on the BOIL RSI. We get a strong 50% move. And now we've had a significant move to the downside again, and we're bouncing, creating another higher low. So, it will be interesting to see if we do move up, okay? And if BOIL does go bullish and get some type of a bullish move, keep in mind your major retracement levels here, okay? Unless we break above 334 and flip 334 to resistance or to support from resistance, ultimately a move all the way up to 334 could be considered a healthy retracement to potentially continue the downtrend, right? So, at the moment, BOIL does look good, like it should have some type of a bounce. But remember, I said that we need to look at the natural gas futures charts, right? And the futures charts are rejecting their 61.8% level. They're rejecting the bullish divergence trend line. So unless those get a breakout on the natural gas futures, that's when we'd actually see the bullish move up in BOIL and potentially a bounce off of the bullish divergence. So I'll be paying a lot of close attention. It could be a good time to potentially go short KOLD if we do get this bullish divergence bounce in something like BOIL. Okay. So, just keep an eye. These are just some simple trade ideas that you guys can follow and think about. If you're enjoying this video, feel free to email me at ZachlyTrades@gmail.com for a one-on-one coaching session. I'm booked up till about Tuesday at the time of this recording. So, I can probably fit you guys in later next week or potentially next weekend. If you're interested in a one-on-one session, I'd be happy to do that with you. Again, just email me ZachlyTrades@gmail.com. Here we see UNG, all right, and looking very similar to BOIL. We have these lows, lower lows, lower lows, lower lows, lower lows, right? And each time we've done that, we've created higher lows on the RSI, and those have been nice trading opportunities, all right? And potentially we're seeing maybe another opportunity here, right? That's definitely a potential, okay? When it comes to the major resistance levels on UNG, we have 606, 642, 667, and 715. All right, those are the key levels that I'm paying attention to. On BOIL, I forgot to go over some of the key levels right here. All right, what we have is 283 is that major resistance level. You can see it was a very valid level over here, support and resistance over here as well. And, we're heading down. If BOIL really wants to continue going lower, 213 is the big area that I'm paying attention to right now when it comes to support. Otherwise, we'd be looking to see if we're going to get a bounce off of this bullish divergence. And I just broke down UNG for you guys. That's pretty much it for today's video. Okay. Hopefully you enjoyed it. If you did, smash that like button, subscribe to the channel if you guys are new. I'm putting out natural gas videos pretty much every single week, whether it's 1, 2, or 3 videos. I'm trying to squeeze out as much as I can without being too repetitive on the natural gas sector. Yeah, I'm out.